Hey, what's up, everybody? What's up, Johnny? Thank you, man, for taking the time to say thank you. Yeah, it's coming up. Red Rocket Countdown. Yeah, I'm feeling a little something today. Feeling a little special. Feeling a little special. A little special day today. What's up, Tom? Good to see you, my friend. Very nice. Hey, very nice. Little $1 above max pain action. We like that. Oh, very spicy. Very spicy. What's up, Zach? I'm doing well. A little sleepy, but happy to see you guys for sure. What's up, Swag? I surprise myself sometimes. I surprise myself sometimes. It was, I mean, I do have to say, part of I'll have these moments, right, where I think a lot of the stuff that I tend to notice is like I'll see one person talking about one thing, I'll see somebody else talking about this, maybe like a third person over here, and then I'll be like, wait, what's this in the middle? And then I'll talk about that, and then hopefully that's something useful to contribute. Like I said, I was inspired by a lot of. Well, Richard sent me a number of posts like from Super Stonk kind of earlier in the week, including the one by Ultimator. And then I started looking at some stuff because of those posts, and then I talked to Ultimator a little bit, and then I was just like, oh wait, well, what about this? And then that took up my Wednesday. I'm pretty sure. And that was like most of my Wednesday. I was writing that article, so had to link that. I really juice that for me. Get the creative juices flowing and all that. Yeah. Greetings, authorized participant. You're either an authorized participant or you are Adrian Peterson. Because you're in purple, I'm leaning towards the Vikings all-time leading rusher, but who knows? Hello, V Passion. Let's see. The chances that those option buys were Roaring Kitty. Don't know. That's not typically been his style, but who knows? I mean, it was pretty cool. I wouldn't put it past a major institution, to pick up that type of play. $20 call for June is pretty much an intrinsic value play. A lot like those puts. It's not a trade that's too dissimilar from those puts we saw. So let me go take a look at this contract actually. 20s right now. Oh, they actually had a really good spread on them today. So bid at closing, bid was 790. Ask was 810. So that's pretty good for an in the money contract to have a bid ask spread that tight. So that's very cool. OI is 8,000 for June there. The volume today was almost 6,000. So how much is this going to be intrinsic value? We closed at 27.54. Midpoint there has these at 8. So there's only about, what would this be, like 40 cents of extrinsic value in these guys. So it's some, but it's not a lot. So this is a little bit better. I mean, this isn't exactly the same as that put play. So those deep in the money puts we saw were, I mean, that's all intrinsic value. There's so little premium in those guys. It's probably lost in the spread anyway. So this is a little different. This one's a little bit more active. Although, when were they bought? What was the fill price on these guys? Let's take a look. Let's go to unusual ones. Oh, USB. Just need this to go ahead and load now. All right. Should be these. Oh, we got a couple of these big guys here today. Ooh. Little qualifying, some qualifying contingent trades coming in here. These are interesting. My word, those are big orders. That's some money. But yeah, obviously the real stars of the show are these guys right here. Yep. Just early and then they stopped. The guns. They've stopped. Average fill here on these is like 775, 78. So they didn't appreciate that much throughout the day. I guess at some point they got up to 825. They ended the day. Somebody traded like one contract. Yeah, before close. Somebody bought one. 825. Oh, sorry, dude. Not a great fill. So there's a little bit of an extrinsic value there. I wonder to what extent that also might be an institution. Look, I mean, I would say this. So this is sort of more, also what I was touching on earlier in the video today, right? Master, yep. Chances are not zero. Not zero. So you're saying there's a chance? Yeah. So I suppose what I'm trying to parse now is the idea to which, the extent to which institutions may be flipping long now. So one of the things that was actually critical for what happened with the stock in 2020 into 2021 was institutions went long, right? Michael Burry went long, but then institutions went long. A lot of big, smart money understood what was at stake with what was going on in 2020. I don't think anyone anticipated that what happened was necessarily going to happen. Again, that was a black swan event in the sense that it was a market black hole. I don't know anybody like explicitly knew that they would be pushing the price that high with what they were doing, and the reason for that happened to be the retail wild card. So right, the sneeze. We can bring up a chart. Let's bring up a chart. Let's pop back over here. I'll walk through this. So some of y'all, yeah, I'm just worried. Yeah, let me know. Chat, sound off. How many of y'all were around for the shebang in like 2020, 2021? Hands up. Curious. Because if everybody knew, lived through that, we don't have to go into this close detail, but just curious. You can say so with your favorite pirate word. Let's do daily charts. All right, let's see. Hands up. Mateys. All right. AP's in for the second one. Oh, Guido, really? Guido wasn't here for the first one, man. I'm just in my mind, like everybody who writes something in, I'm just like, we've been in this since ground zero, dude, You get bonus points if you were here for the 2013 sneeze. I was not here for that squeeze, the 2012, 2013 squeeze. Only OGs remember the 2012, 2013 squeeze. I feel like that's what we're going to be. I feel like that's going to be us in Grapevine. In I say this a lot, right? My vision for Grapevine in 10 years as we all go to the shareholders meeting. I feel like that's what it's going to be in like the one of them in 30 years. Be like, yes, I remember the squeeze. Like OGs only remember the squeeze of 2027. Brian's newish too. Cool, 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 cool. Gamma Chad was here. Man to Galaxy. Oh, Shinsatsu, what's up, dog? Haven't seen you in a while. What's good? What's good? What's good? Okay. All right. So we got some OG apes, as it were. Back when what was the original term? I'm pretty sure everybody said retarded. That's how you know that was the old thing, right? That was the old thing. Everybody was retarded. Everybody was retarded. Nobody was called ape. That's what I remember back in the day. Nobody was called ape. Ape was later because then Wall Street Bets, because then Wall Street Bets became mainstream. And then that was like, everybody would always be like, oh, I'm so retarded. Blah, 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 blah. And then guys, remember Ga? Remember Ga? Nobody does Ga anymore. I miss the old days of being retarded. I'm still retarded, but yeah. The ape great migration. Yep. Yeah. So let's pop over here to our chart, right? We can go take a look at what was going on back at the original deal here. So what happened back here, right? So I mean, everybody loves, like, we love our big bull flag, like we love all this stuff that's above bar here. The real comparison is we got to get into the weeds in here, right? So zoom in, zoom in, zoom in, zoom in, zoom in. It's so difficult, right? Oh, wait, hold on. Zoomed in too much. There we go. Zoom in, zoom in, zoom in, zoom in, zoom in, zoom in. All right. Y'all remember when the chart looked like this? So this, right? Okay. So we got some excitement back in 2020, right? April, May. Okay. So this was like our COVID bottom sort of a thing. This is sort of the idea of this tweet that I was pointing out earlier here. Actually, we look super similar to this, like now. Like actually, like right now. Like we look like this. We're doing this again. Not exactly. Right, but right, sometime here in like March, I forget. Right, Ryan Cohen had that tweet where he was like, "Hey, remember back when we all wore masks like retards?" And that stood out to me especially. Right, full circle here. He used the T word, right? And then I was like, oh wait, in 2020 we were all retards. Like a bunch of people, I think, probably read that as like, oh my God, he can't say that word. We don't use that word anymore. Ryan Cohen, he's so MAGA, even though he's Canadian, he's the worst. It's like, no. He's definitely referring to back when everybody who was in the GameStop thing actually did not refer, like that's back when we didn't refer to ourselves as apes. That's when everybody who was invested in GameStop just was pure retard is what we called ourselves. So I immediately thought of that. And so this came back up today, basically off of, what our price action kind of ended up playing out to be. I'll make this a little bigger so y'all can see here. Yeah, like if you compare our price action here, I'll bring this up so we can like side by side these maybe. It's not exactly the same, obviously, but it's not that different, right? So can I do a dual screen share? I think I can. Oh no, I can do one at a time. That's okay. I'll switch, right? So here's our daily chart back in April. So okay, going into earnings was on same date. So this year it was 26th of March. Last year 2020 it was 26th of March. Traded up into earnings. Nice big move there from $1 to $1.25. So we would have moved back in that day from $4 to $5. This was before I entered the stock. Then afterwards, short down, all the way to, this was the bottom, right? COVID bottom was the bottom. That was the bottom. GameStop never got lower than this. And it bottomed on Friday, April 3rd. All right, let's pop over to our recent chart here. Hopping down, leading up into earnings, trade up into earnings. We go up, right? So we go up from what, 25 almost to 30. So a little, actually same percentage move, 25% move. And then we come down super hard down to this 500-day moving average here. Do we have this on this other chart? That's way above us back here. All right, then bottom, right? So earnings is on the 26th, which is a Wednesday, not a Thursday. But then going ahead, we get a little bounce, a little bouncy bounce, and then we bottom. Guys, we bottomed on April 3rd. You can't make this up. April 3rd. Bottom. Then we moved up pretty aggressively. That's a really big move too. That's like, what is that? That's like 100-something% move. That's a crazy volatile move right there. Didn't get quite as big, but we definitely had a, from bottom to top here, something like a, is that a 40-something% move? 40-ish% move. So not as big, but we did move up here. So interesting, very interesting to see that. And so what I thought of was like, oh, all right, is Ryan Cohen letting us know? Is he potentially pointing out that what we could be seeing is, I mean, you know, naming this thing Project Rocket, is this the setup? Is this the setup to see this type of thing happen again, right? I mean, maybe not this, right? A lot of what drove this was the wild card, which was retail, right? Nobody anticipated here that retail would become so crazy involved. So, right, this was, Roaring Kitty was doing his thing in here. Ryan Cohen bought late August. This was around Ryan Cohen's buy-ins. And then we went through this like kind of snake pattern up here. And then January, right around January OPEX, a couple days before January OPEX was then Ryan Cohen had revealed just a little bit prior his October his earnings buy. So he had his Q3 earnings buy. And then we really started to move up. And then a lot of these had to do with the really precipitous stuff here. So this move up to the 22nd. So here, right up to this Friday. This move was a combination of FTDs. So like settlement from back here. So can kicking through ETFs, right? So this was a combination of settlement, maybe going into a margin default, and options. So this was when WSB this week here, the 13th up to the 22nd, maybe even that following Monday. This was like the kind of, no, not quite that Monday either. Friday, 22nd. This was like the golden, sort of window of WSB like call buying frenzy. Okay. Was this window. And if you go look at Spot Gamma, that they'll tell you that's the case, as well as the SEC report. This was not. So this was not primarily options. This was driven by a lot of, I mean, majority of options in this area were puts. So a ton of puts were being traded here. A lot of what happened was because it was very difficult for institutions who were short GameStop to get a hold of shares, institutions were buying a lot of calls. So retail was selling a ton of calls to brokerages in this area. what really seems to have driven this, on top of like, institutions going into margin default and stuff like that, was retail coming in and spending so much money. So when GameStop became this like crazy phenomenon that ended up across all these news stations, and everybody was like, it's guaranteed going to $1,000, which essentially it was if they didn't turn off the buy button. That was supposed to, that was going to happen. And that's what gave it that extra kick, was then all of a sudden it was very illiquid anyway. And then a massive wave of retail money came in and just bought up everything. Made it incredibly difficult to get a hold of shares, and then stuff just went absolutely nuts. The only way they control it was by disallowing buying, and then doing all this type of swap shenanigans. Just taking a look at this at May. Humble request: when you show by chats, I imagine you mean charts. Can you be sure to call out dates and prices? Sometimes I watch you on a small screen or listen to you at work and can't see the tiny numbers. I'll try. I'll do my best. I'll do my best to do better at that, May. Thanks for the tip. Oh, I see. Right here. Charts. Yep. What's up, JT? That's okay, man. We can supposed to be working together. That's a sentence. Yeah. So, okay. So what happened here? What is it possible that what Ryan Cohen is suggesting is that we might be looking at a year or something like that, that would resemble the lead up to this event? Like, okay, obviously we can't necessarily count on, retail hopping into this, pumping the stock up, whatever this was, 1,000% in like 3 weeks. Can't necessarily bet on that. A lot of people probably are. A lot of people, I imagine, over on Superstonk would love to see that type of thing happen again. I don't necessarily know if that's the case. That would be a very low probability event, I think, if it were to happen like that again. But could we get something like this we start to just kind of grind up here late at the end of the year, where we get this move where we go from, at the time, I guess it was around $4 or $5, $3-4, I think, is when Brian Cohen bought in August. And then we just go to, I guess, Rory Kitty was celebrating us crossing the $20 threshold at Christmas with his Christmas live stream. Could we see something like that, right? Could we see that kind of like 500, 600% appreciation in the stock by the end of the year? And so, we've got this, I guess, setup here, something like this. One of the things that drove this was the participation of major institutions. We could have some forward signaling. This is what I was talking about earlier in my video. And earlier this week it's virtually assured now we're going to get a number of rate cuts, 3 or 4 rate cuts. The Fed really hasn't shifted guidance on those rate cuts coming this year. Rate cuts pump the market, right? Rate comes down, money flows into equities. Bonds are not as favorable, right? So fixed income securities are much less profitable. They do not offer as attractive a return. And so there is more appetite to take on a bit more risk in order to get a better return percentage in equities. Now, what I talked about earlier this week, perhaps for those of you who did not have a chance to see the video or to read Wednesday's article, especially, heading into FOMC, right? This was an open question, was whether we were going to get some different forward guidance from the Federal Reserve. They did not pivot. And another period went by where we didn't get rates raised. So what this has essentially done is this has essentially moved our, it's increased the probability, given that Fed guidance still says 4 rate cuts coming this year, and we only have 5 meetings left. So if we don't get one, yes, Fed signaled no rate cuts, this week, which they didn't do, and no rate cuts for June. But No, they didn't. They didn't change their guidance in terms of seeing those rate cuts by the end of the year. Maybe they don't do 4, maybe they do 3, but we're running out of meetings where rate cuts could potentially occur. Now, GameStop last year, so if we bump back over to our charts, I pointed this out earlier in the week too. It seems in large part that I would reckon, given our really huge increase in volume here around certain key dates, that the announcement of the rate cuts last year were hugely responsible for a fair bit of the bullish volume on the stock into the later part of the year. So, for example, we got a rate cut on the 28th of September. 2 days later, massive volume. It was also unexpected. It was larger than expected. It was a 50 basis point cut rather than 25. And huge volume, huge bullish volume, big bullish movement up the following week coming out of September OPEX before we got kind of adjusted down. And then, of course, part of what this was probably clearing FTDs from back in here, combined with in the middle of this, right here, September 7th, we got another rate cut. So we had clearing FTDs, we had Roaring Kitty doing his thing in here, and we had another rate cut come in. This really big move was probably a combination of that stuff. So these FTDs from the first rate cut, the response to the second rate cut, and then what kept us moving probably into the 35 zone here was, you guessed it right, here, another rate cut. Another rate cut. This Friday was a big bullish day, and we just soared over the next week up into this double top. Okay. Then rate cuts paused, and so more opportunities to adjust the price down, which we saw take place. We did have some bullishness here around the 14th of February, which is when, so this is regulation show rule 13F-2 form show was supposed to be, the first rounds of form show was supposed to be, were intended to have been submitted on the 14th. Which would have required institutions with short positions of greater than 10 million, greater than or equal to $10 million to disclose them publicly as they would other institutional filings. That was postponed by a year, but we did see some very interesting price action around that. I think some institutions essentially had prepared to go ahead and close out some of these FTDs back here before it was known that they weren't going to have to actually disclose their positions. So, okay, we know these rate cuts are likely coming up later in the year. We will likely have these as bullish catalysts on the stock. The net asset value floor of the stock has risen now considerably. It does seem as though GameStop has potentially bottomed, right? This could have been a net asset value floor sort of bottom test. Maybe we get something else like it, but right back here before earnings, net asset value floor was projected to be around upper 20s, close to 21. That's where we bottomed back here. But now, right, it's in the mid 25s. What happens when GameStop reveals that it has a Bitcoin position? What happens when GameStop reveals that it's also sold off some of its less profitable operations like Micromania in France? That's going to add more to the asset pile there. What happens, right, with each successive quarter? What happens when they do new offerings, especially accretive offerings like they've been able to pull off? Does that set us up, right, especially if we don't get this rate cut in June? So rate cut is not expected to be taking place in June, but 4 cuts are basically still in forward guidance right now. If we don't get a rate cut in June, that basically says we're going to get rate cuts for the remaining 4 FOMC meetings. So July 30th, September 17th, October 29th of this year, which is National Cat Day, and December 10th. So you'll recall these were interesting days, right? Last year, especially October 29th and December 10th. So those will be interesting 1-year anniversaries there for key days in what our price action was last year, heading into this year. So do those type of events sort of do we get sort of an interest rate cut, a series of interest rate cut catalysts in 2025, plus all of this kind of action ahead of time to stir up the pot that Ryan Cohen, right? Ryan Cohen's been doing these accretive offerings. Roaring Kitty came in to sort of bring the stock back, right? Was last year actually, in terms of comparing a sort of larger, broader price action archetype, was last year the 2019 of the 2025-2026 squeeze, right? Is this 2020? And then is next year 2021, something like that? And I think I'm curious about this to actually check out rates. I haven't looked at this yet. Did the Fed cut rates in 2020? In 2020, I think they may have. Let's see what they did. So they definitely cut rates. On what dates did they do this? Let's take a look, gang. Let me see here. This is Brookings. Let's see. What dates did the Fed cut rates in 2020? Statista, it's not gonna let me do that. I don't know. All right, let's try this one. Forbes, you gonna show me Forbes? All right, here we go. Here we go. So, only goes back to 2022. Oh, here we go. Yeah, so March. All right, hard to get lower than that, but they did cut rates in March. So not later in the year, but that March, they cut rates pretty steeply. So it was 0. So in case anybody's wondering why the stock market pumped, why everything pumped in 2020 and 2021, they set the Federal Reserve interest rate to 0. So there was no incentive to put money in bonds. The Fed was pumping. Listen to this, right. This is actually, knowing what I know now, being such an ignoramus, I guess, back, when I first, this is essentially when I first started teaching myself about this stuff. Let's get this straight, everybody. Okay. The Federal Reserve, the US government printed enough money to double the currency in circulation in 2020. At the same time that they did that, they set the interest rate to 0 so that no one would collect any interest by saving it. Hindsight's 2020, guys, but that has to have been one of the most insane market pumps to ever occur. To cut interest rates down to 0, print all that money, send out stimulus checks. Yeah. I mean, I think we know where a lot of those stimmy checks ended up going, though. They went straight into the market. I love those memes. Wait. Wait. I love this. The Bugs Bunny one. We have to find it. I forgot. There was one of them that was like that. It was like this, right? It was like this, where it was like the kid going like, "All right, I got my stimulus check," and then Bugs Bunny, like communist Bugs Bunny, with the words like the stock market going, "Our stimulus check." Like, I remember this. So could we get something like this, right? I mean, obviously, the circumstances then were extraordinary. Also, there were also various changes in human behavior. 2020 is in fact an anomaly. But could we see something like this? Could we see something like the catalyst for movement in GameStop in the second half of the year, basically maybe beginning after we get something like, I mean, I imagine we'll still see, some interesting price action between now and August, but could that potentially serve as, if we start seeing interest rates come in, could that serve as this sort of catalyst every kind of 6 weeks that kind of get us kind of chugging up like that, like we saw at the end of 2020? Interesting thought. Certainly, that was a major realization that I came to as to some of the underlying causal factors as to our price action. Certainly last fall. Interesting to sort of put that on the table there. Let's take a look at the chat. We're gonna go back. Oh, Bubbles. Nice, man. That's a good name for an ape. Bubbles. Yeah, I didn't sell. What was my position back then? I put every dollar I had into GameStop. I definitely YOLO'd at what would have been like $8.50 to today. I YOLO'd at $37. That's what I did back in the day. Yeah. Question from Guido. Guido says, "What do you think it will take for Wall Street to take GameStop and Ryan seriously?" Oh, I think they're definitely taking him seriously now. To do this bond offer, the bond offering, like the way that was sold out, to have that as like a debut offering. Yeah, Foxen was pointing this out to me the other day. To do the bond offering and then have that whole thing sold out, like have the order book like completely overbought, means that like Wall Street took that seriously, very seriously, and took Cohen seriously. That's what that means, essentially, to have them like snap that up. I think I mentioned this as well. We talk about this a bit, right? The ETFs. So the two long leverage ETFs, these were formerly short ETFs. They're now being moved over to 2x leverage GameStop long ETFs. Not every stock has a long ETF, has a 2x leverage long ETF on it like that. They're usually very big. Apple, Tesla, Nvidia, especially with T-Rex, right? Apple, Tesla, Nvidia, some other things too. They've launched a couple of them very recently. Snow is another one they had on there. I saw Coinbase. I think they're also Coinbase. They also have one. But okay, I guess a good sign that they're long ETFs. Yes, they might be used to control the price, but if those are flipping over to long, then these are institutions are striking deals to establish funds to prepare for the fact that this is going to occur. I mean, why? Right? Eventually, that's the thing with like Tesla or Nvidia. Why were those just allowed to let fly? And a part of that is like their thesis was essentially dead, and it was time to just let that thing go. So position yourself so you can, I don't know, so you can find a way to recoup losses or distribute losses or something like that, so you can flip and go long. So just like a bunch of institutions did, a bunch of institutions went long on GameStop in 2020. That's definitely what we're going to want to see going into this year. This is why next week's going to be really big. Next week we have institutional filing from the previous quarter. So the quarter ended, I guess, this fiscal year quarter. So 31st. So anybody who bought GameStop at those lows after earnings will be revealing a position. Now, some of them could have done it in early April, so they won't have to file until August. I think anybody who bought in April doesn't have to file until August. Pretty sure. But they're still going to do that. They're still going to do the meme stock thing. They won't stop doing that. They haven't stopped with Tesla, right? Like the quote, like Tesla Bros is still a thing. Is that still a thing? Are there still Tesla Bros? I feel like the Tesla hype is done, but they're still like, the price is so up because of Tesla Bros. There was like the Reddit campaign to try to, like, they orchestrated that Reddit campaign to like take it down, right? Like that was all like, oh, politics, oh, destroy Tesla, Elon Musk is terrible. Like immediately I see that, I'm like, maybe I'm the real conspiracy theorist, but I'm like, oh, that's Wall Street. That's Wall Street. That's what that is. That's trading. Okay. All right. That's what that's really about. Lopiano is my name. That is my name. I hadn't watched that video yet. That was over on TradingView. Last I checked. Yeah, I mean, I think we have to ask, right? We have to ask, like I've talked about this here, right? Does GameStop have those types of cycles? What does that usually have to do with, right? So I think a lot of that has to do with quarterly cycles, right? So just kind of quarters. Quarters are about, right, they're about 12 weeks. And the way that the swaps are laid out, the way that like maybe FOMC ends up happening, like I think a lot of these have to do with quarterly OPEX. And part of why quarterly is that has to do, Richard's been talking about this a lot recently too, has to do with ETF rebalancing. So you can play a lot of games, I think, is what seems to be the case, is you can game the system with ETFs. You can do that in between quarterly OPEXs, but when it comes to their rebalancing time, it's like that's harder to do for some reason. Like you have to close stuff out. And so a lot of that, I think, has to do with what we've seen recently is, like I said, in the fall, we had what was going on with FOMC, and all of that basically took place in the same quarter. September, yeah, we got 3 rate cuts all in the same quarter. So we were just bull for a quarter because we were just rate cuts all throughout there. Plus FTDs, plus what Roaring Kitty was doing, plus all this stuff, plus hype about a recall, all of this. Yeah, quarter is going to take about 10 to 12 weeks. And I've been talking about that as far as the volatility cycles, right? Gherkinit, I think, to a certain extent, a few years ago, were something like that in there. So yeah, it does. But I mean, it shouldn't. Part of the trick is understanding like what really is consistent, like what's constant, what's really variable with the price cycles, what really drives them, right? Because we can say, oh, it looks like this happens every couple of, it has this number of weeks, et cetera, 10 weeks up, 10 weeks down, or 12 weeks up, 12 weeks down, something like that. But what's really operative there? What really drives that? What's the reason we kind of have those cadences? Is it like, clockwork, or is there every single time there's a different sort of, an institution is punching something in, is manipulating the price in a specific way because of a specific aim? Is it on a 1 year? Is it like 1 year and it just repeats? Is it on, is it like with swap cycles? Like, is it 1 year swaps? Is it multiple sets of 2 year swaps that alternate? Is it multiple sets of 2 and 3 and whatever? And these are just kind of, is that what's going on? So that's what I think about in that context there. $30 cover call. No, oh wait, $30 call wall next week looks formidable. Are things lining up to still challenge it? Yeah, so I wouldn't put the odds of moving past that, particularly by my own assessment, probably particularly high, unless there's some kind of catalyst that's going to show up that I don't know about. I mean, if we go look over at our technicals, let's do this one. Like, could I see us moving up here and doing this thing? Yeah, we could do this. We could come up here. But I think if we go up there, I would imagine, right? So much of this, right? So much of this depends on what is it exactly that's going on behind what we can see. Because we see representations, we see charts, we see gamma, we see volume, we see options, we see studies, we see technicals, we see all this stuff. But who are really doing things that's driving the price action? If what we're seeing this week, these are some pretty big bullish bets. This was an interesting time to put $4.5 million on $20 calls for June. Why wouldn't you make that bet the previous day? The puts came in when stuff was low. Very interesting to see that much money come in on June calls now. So we are starting to see options activity that says, okay, we're gonna resume our movement back to the upside. The thing about that $20 June call, that's why that position is attention worthy. Number one, it's very big. Number two, that's not the kind of position that you enter into for a day and a dollar move in the stock. It's not going to move that much, as we saw. Like, and the thing is, it took you that much to get into that position. You move the stock to get in, so you had to have like an average price thing. To get out, you wouldn't clear a profit. And it's like, are you really putting up $4.5 million for that type of trade so you can skim 50K? Like, that doesn't make sense. That without a guarantee, the bid-ask spread, you're really going to be able to get out of that. It's decent bid-ask spread, but so I think that's a longer play, and it's not going to appreciate unless we go up, right? I mean, you can sit in it for a while because it does look like that was just the 2x NAV floor, but same thing with the puts. That is not a short-term play. That is synthetic. That is a synthetic long position on the stock. Maybe somebody just holds that from now until somebody might be looking at that just going like, oh, okay, we're not going down anymore. That's line in the sand. We're just gonna go up now, maybe, or sideways and then up or something like that. Do I think necessarily we breach 30 next week? It would take a lot to do that for a number of reasons. Number one, options. There are a lot of options there. I don't know a single dealer who would necessarily want that position to close in the money. Too many. I think we have tens of thousands of contracts next week at 30. Current OI, as we see it now, it's going to update. Yeah, so 17,000 for today for next week. That's a lot. It's not a ton, but it's a lot. It's bigger than any strike we've seen recently. That's going to bump up when we see the numbers refresh. On Monday, a bunch of stuff's going to get rolled into that. That's probably going to be like 22 or 23,000 probably on Monday. That's yeah. Man, it took like to see what it took for us to get over that position last fall was quite a lot. I mean, our cash floor was a lot lower, but my thought is because this seems to be a price level that's important for the swaps too, for like swap people. So I imagine there will be an effort to keep the price under there as long as possible. I also think that's when the bonds move in the money. Actually, that's their. I think that's probably their gamma max point. I think like $30, so $29.85. The strike price, like the strike price, like the face value on the bond it's $29.85. But I'm pretty sure that's going to be like the gamma max on the bonds. So right, could go either way. But if you have, profit is kind of either way you go. If you establish like a position there, like if it goes up or if it goes down, you don't care if you're a gamma trader. But if you also have another party that does not want it to go above 30, or multiple parties who don't want it to go 30, like if you're a gamma trader, you're fine to let that go back down. So tests of 30, I could see a test of 30. Although I will want to see some more there to see what that might look like. But now we have a lot of short calls, I think, that came off the board today. Very cool to see us move through 27 today. Very happy to see that. I think we got a shot earlier in the week rather than later in the week, but I think we got a shot. I think we might also have a shot if there tries to be some stuff to kind of play up, like Roaring Kitty 1 year rhyming hype stuff. But otherwise, I think it would take like a tweet from Roaring Kitty to actually move through 30, something like that. That's my thoughts. What's up, Kurt? Gonna skirt like my man Kurt. Oh. Catch me outside. How about that? What's up, Maxie? That'd be cool. That'd be cool. Could be a catalyst. Hey, right. So part of this, right? A lot of people like to say this thing about like, oh my gosh, he's a time traveling wizard, incredible, blah, blah, blah. Yeah, but part of this too is again betting on statistical likelihoods. That's what we do, right? That's what trading is. Trading is understanding. Well, sorry, this is risk. This is life. This is all games. You can't have perfect knowledge unless you design this like closed thing, right? This like closed loop that you just you try to max in a place where you got this perfect knowledge. But nowhere in life are you going to have perfect knowledge. There's an infinite amount of knowledge that you can acquire about any single specific moment in time. You will never have it. You will never be able to, so you always have to sort of boil things down to probabilities. Risk is about being able to be accurate across a long enough time frame that in iterations of a given game, you have success over time, right? I don't, even though I target a really, really high win rate with the stuff that I do, and I do really high probability trades, I don't win every trade. I still make mistakes. I don't have perfect knowledge. You guys know this, right? And so I aim in sort of a lot of that I do for my own trading is I aim for a level of, like, I see people get mad at me sometimes. They're like, oh man, like your predictions are worthless because you'll say like, oh, it'll be like, it could go up or it could go down between. It's like, between these couple of dollars. It's like, man, if you don't know that like you can make money off of that, like I can't help you. Like I can tell you directly that like that type of information helps me make money. Like you can too, but so the thing with the catalyst, right, to this catalyst question, there are a number of things, right? It's about creating opportunities. And that's sort of the thing that I also try to do with trades. It's like it's creating opportunities. It's layering opportunities on top of one another, right? So if catalyst A doesn't go off when you think it will, you've got B, C, D, E, F, you've got all these other things. And I think that's also kind of something that Roaring Kitty kind of gestures at with his wildcard thing. So Bitcoin becomes an option for a catalyst because Bitcoin could go off. Now you're sort of opening that up. You have macro stuff with Trump and Doge. Are they just going to come in and like ban short selling or something like that? Like, what are they going to do? Are they going to necessitate? Are they going to really like start to, crack down on institutional shorting and FTDs and instantaneous settlement and things like that? Are they going to do something in that department? Are they going to crack down on like politicians doing insider trading or who knows? Who knows? But that's a wild card. Wild card with the tariff stuff. Wild card with interest rates. Now you got interest rate catalysts potentially with swap repositioning and whatnot. And all the while, Ryan Cohen is up goes the floor with cash. So it's like, okay, hey, if none of these catalysts go off, like I'm pretty sure Roaring Kitty with the run tweet, he may have thought a year from now, rule 13F-2 form show going to have to be paid on February 14th. That was a miss, right? Because in January they changed it so they got a year extension and they didn't have to file that form. But if that did hit, everybody would have been like, oh, he's a time traveling wizard, right? That could have been a major catalyst. It was a date of impressive price action anyway, even though they didn't have to file the form. So I think a lot of this stuff is boiling down to, opportunities and creating opportunities for the company. And I certainly think Bitcoin is one of those opportunities, even if it's not or doesn't end up for one reason or another being quote unquote the opportunity. But great point. Yeah, going back to our discussion about 2020 here because the cuts. Yeah. That was like, in hindsight, that's really like 2020 was a ridiculous year. What a year to jump in. I don't know, like my trial by fire here. I guess I have to redo my bio. Like my bio got taken down with my Reddit page too. But that was trial by fire. And I remember just doing random stuff. I made up, like I had a group of friends that I would do stuff with, and we would just we would do the meme stock thing, but like not real memes. Like we would make up our own memes with ourselves. So like one of them that I remember was we made up the Macys challenge, and it was like you had to make a certain, like with a certain amount of money on a certain like type of, like you could use any contract you want or you could do shares or whatever, but you had to make by a certain date, you had to make a certain amount of money only trading Macys. And we called it the Macys challenge. And there was no like, we didn't define a reason for why we did it. We were just like, Macys challenge. Macys challenge. You won't do it. Do the Macys challenge. I mean, like, wait. Why are we doing Macys challenge? No discussion of technicals. No, not even that there was like an internet thing, like Macys was going to go anywhere. No, like YouTube guru, nothing. We were just like Macys challenge, and just said it enough times. And then sure enough, Macys had its day. Like it had its day in 2020. Like, do we even still have that chart? Let's go check out the Macys challenge. Bonus round. I don't know what VIE means. Make it bigger here. Macys. Let's see. Let's go back. Let's see the Macys challenge. A little bit of lore, a little bit of 2020 lore for the channel. We need to have some lore fill-ins. There it is. Oh yeah, the Macys challenge. So right here, yeah. I remember this. Right here. I think I bought in like somewhere in here. And we just Macys challenge. That was the dumbest thing, dude. And then I think by here I like already lost all my money, so it was fine. But yeah, don't do that. But that was that was responsible for a lot of ridiculousness back in 2020 and 2021. I've come a long way, I like to think, since the Macys challenge. It's all fun and games till so you think you're invincible because you won the Macys challenge. Oh, nice job, Bubbles. 1,000 moon tickets is nothing to shake a banana at. That's me. That's my last name, Lopiano. Hood is also another one that has a 2x leverage on it. I do not smoke. I like to sing, right? So I never got into smoking, specifically because I really love to sing. Especially in liturgical contests and stuff. I went to, or not contests, contexts. I went to I studied masqueraded at a conservatory while I was studying in college. So I love to sing and do stuff like that. So I never got into smoking because it would mess up the voice there. But cheers if you partake. Yeah. May says, I figured the 2x ETFs were made to be super efficient at handing out locates for synthetic shares, delaying any kind of settlement. They might. I wouldn't be surprised if they did that. They're certainly allowed to take on, looking at the prospectuses, they are allowed to take on, they're allowed to acquire shares. It's not going to be the primary way by which they get that 200% daily exposure to GameStop, but it is one way that they will. And if they have however many shares, it could be a few thousand or something like that, 10,000 shares. They can fully do, the prospectuses say they can fully do the creation redemption process, which means they can, institutions can reconstitute units to do whatever they got to do to meet liquidity requirements and settlement and all that. So yeah, they could do that. But it's telling that, like, why not just leave it as a short one, right? That's something there. Let's see, Doc, is there a good possibility that GME starts to buy stocks like Top Mag 7 since they're a holding company? Oh, if they would hold Mag 7, I don't know. I don't know if they would do that. I don't know that that's necessarily the investment policy there. I think they want to target, well, maybe I think it's probably going to depend on how much equity they actually raise. I would not be surprised if they don't touch that like first 4 or however million in cash that they had. Maybe they take some of this. At some point, it's going to be expected, I'll imagine, that because it's in their filings, they'll take some of that 1.5 billion that they got from the bonds and put that into Bitcoin. That first 4.3 or 4 point something, however much that was, 4.6, 4.8 that they have, I wouldn't be surprised if they just don't touch that for a while, especially while they're like working to get the business squared away. And hey, that's another thing that's going to come up too, right? Is we're heading into a console cycle, three-year console cycle. Foxen had a really good post about this too. Fox and Flask, Bad Robot Ventures. So yeah, we're heading into a console cycle. We got Switch this year. Xbox and PS3 probably coming up the next couple of years. That's going to drive a lot of revenue, billions and billions of revenue. So the fundamentals of GameStop are going to look real good real soon over the next couple of years. Like, we've turned a profit in the down season, right? So out of the console cycle. That's another thing that resembles 2020. 2020 was a console cycle. 2020 was a console cycle. 2012 was a console cycle. That's part of why the 2012-2013 squeeze happened. Roaring Kitty pointed this out. Richard recently pointed this out. Console cycle drove a lot of that. Switch pre-orders are happening now. That's going to look real good, right? Those sales are going to look real good. Game sales, accessories, things like that is going to look really good going into the year. So, going into Q4 especially. How many kids are going to get a Switch 2 for Christmas, right? That's going to happen. I mean, do they need to? Is the question here. So Guido says, is there a way that GameStop could market themselves to attract long investors other than traditional members of the informed GME community and institutions? If you've got institutions and the apes are still on your side, do you need other investors to come in? That's not the case with Berkshire Hathaway, right? Eventually they did do Berk B, but Berk A shares, like, they're just like, no, if seeing a $50,000 share price keeps you away from the company, you are not the sort of investor that we want invested in Berkshire Hathaway. If you think that's an issue, right? If you're scared by the individual share price, rather than assessing the value of the company, then yeah. Yeah. They'll change the narrative, right, once they they'll change the narrative once it's convenient for them. I don't know where that's going to be. What's up, Boogie? Haven't seen you in a while, man. Glad you can make it. I don't really understand your question. Yeah. So that's our outlook. I think we got a lot to look forward to into the second half of this year. Outlook for as much as had a pretty cool bullish outlook going into the end of 2024. I'm pretty stoked about what things are going to look like going into the end of 2025 into early 2026. So a lot of things to thinking about. Gonna, obviously keep coming at you with daily analytics here. Great to see you guys. Great to see everybody on the live stream today. Great to see comments, questions, see everybody on Twitter, see everybody on X, see everybody on the YouTube comments and stuff too. So thanks very much. I hope you guys have a great weekend. Enjoy this nice close to the week here. Don't get too caught up in any Macys challenges. Take a lesson from my book, I guess. But great to see you guys. And we'll catch you for the next live stream. And as we go into May OPEX, and next week, we're going to have institutional filings to talk about. Going to be very juicy to go through those. So we'll see you guys then. Thanks very much, everybody.